All right, let's jump right in. If you have a pension from another country, you know the feeling. Every year, it's the same old story, trying to report it on your US tax return. It feels like you're fighting with the software and it's just not built for your situation. Well, today, we're going to pull back the curtain and show you exactly why that happens, and more importantly, what you can do about it. Does this look familiar? Yeah, I thought so. You've spent hours getting everything perfect, you're ready to hit that e-file button, and bam, you hit a digital wall. The software is screaming at you for U.S. Employer Identification Number, an EIN, that your pension provider in, say, the UK or Germany has never even heard of. I'm here to tell you, you're not going crazy and you didn't do anything wrong. And this is the most important thing to get right off the bat. This is not your fault. It is a system-level problem. It's a clash between the law, which says you have to report your income from all over the world, and the technology, the e-filing system, which was designed with only U.S. income in mind. So that frustration you're feeling, it's completely justified. So here's the game plan. First, we'll look at this EIN digital wall. Then we'll untangle the actual rules of the road for reporting. We'll explore the two main workarounds people get forced into, expose a really nasty state tax trap that most people miss, and then we'll land on a smart strategy to get this filed correctly and keep you in the clear. Okay, so let's really zero in on the core conflict here. You've got U.S. tax law on one side saying, hey, you're a U.S. citizen, you owe us tax on your global income. But then you have the IRS e-filing software on the other side saying, nope, sorry, can't process this as a pension without a U.S. ID number, and that's the deadlock. This right here really puts it in black and white. Look at the U.S. pension on the left. It's so clean, right? You get a 1099-R, it has that magic 9-digit EIN, the software sees it, and everything just sails through. Now look at the foreign pension on the right. You get a totally valid foreign statement, but because that US EIN is missing, the e-filing system just slams the door in your face. Block. All right, so before we can find the solution, we have to understand the rules of the game, how the IRS actually views your foreign pension. And spoiler alert, it is not the same as a foreign salary. So here are the big things to know. First, worldwide income is taxable. We've covered that. Second, and this is a huge one, pensions are unearned income. That means you can't use the foreign earned income exclusion, that Form 2555 a lot of expats use to exclude their salary. It just doesn't apply here. Instead, the IRS basically treats it like an annuity, a stream of payments. And while tax treaties might change how much tax you pay, they almost never let you off the hook for reporting it in the first place. So because the software traps you in this endless loop asking for an EIN, most people get funneled down one of two paths. And honestly, neither of them is perfect. But one is way, way better than the other. And hey, you don't have to take my word for it. This quote from a tax form just says it all. This person tried to do the right thing, use the correct substitute form, and the software still blocked them from e-filing. It's the perfect example of the problem. So the system basically forces you to a fork in the road. Path one is the easy way out. You just dump the money on the other income line. It's not quite right, but it guarantees you can e-file. Path 2 is the technically correct way. Use Form 4852 to create a stand-in for the 1099-R, but as we just heard, that's the path that's littered with those e-filing roadblocks. So you might be thinking, why not just take the easy other income path and call it a day? Well, this is where the easy way can get really, really expensive. See, how you label that income on your federal return can have a massive domino effect on your state taxes. Okay, this slide is the whole ballgame. Look at that bottom row. When you choose the easy path and call it other income, you lose its identity as a pension. And why does that matter? Because many states have incredibly valuable tax breaks for pension income. But if your income isn't classified as a pension on your federal return, your state won't see it as one either. And just like that, you've lost that exclusion. We're talking about potentially hundreds, even thousands of dollars in extra state tax, all because of a software limitation. All right, enough with the problems. We've seen the trap, we know what's at stake. Let's talk strategy. Let's build the solution that lets you report accurately, e-file if possible, and most importantly, protect those state tax benefits. And the hero of our story is this, Form 4852. I want to be really clear, this isn't some shady workaround. This is the official IRS-sanctioned tool for exactly this situation. It's designed for when you're supposed to get a form like a 1099-R, but the payer doesn't give you one. Its whole purpose is to get that money recorded correctly as pension income. And here are the two magic words straight from the IRS instructions. If known. The IRS itself acknowledges that you might not know the payer's ID number. This is your legal green light. The law allows for this. The problem isn't the tax code, it's the tax software that ignores this little instruction. So here is your step-by-step game plan. Your number one goal is to get this income showing up on lines 5A and 5B of your main tax form, the 1040. To do that, you're going to use Form 4852 in your software. In the explanation box on that form, you just tell the truth. Foreign payer, no US EIN available. Now, if the software still throws a fit and blocks you, the accepted professional practice is to use a placeholder number, like all nines, just to get past the digital gatekeeper. Because remember, the Form 4852 you're attaching is the real document, and it clearly states the EIN is unknown. In a worst-case scenario, you might just have to print it out and mail it in. Being accurate is way more important than forcing a broken e-file system to work. Now, there's one more little wrinkle. If you're using a tax treaty to get a special benefit, a perfect example is that 25% tax-free lump sum you can get from a UK pension, you usually need to file an extra form, Form 8833, to officially tell the IRS what you're doing and why. Okay, so getting the income on your tax return is just one piece of the puzzle. The government also wants to know about the foreign accounts themselves. This brings us to the FBAR. If the total value of all your foreign accounts, including that pension, hits $10,000 at any point during the year, you have to file this form. And notice, it goes to FinCEN, the Financial Crimes Enforcement Network, not the IRS. And then you have its cousin, FATCA, which uses Form 8938. This one is filed with your tax return, but the thresholds are much higher. We're talking hundreds of thousands of dollars in foreign assets. And yes, your foreign pension counts toward that total. And this is my final critical piece of advice on all this paperwork. Be consistent. The numbers need to tell the same story across the board. The income on your 1040, the asset value on your Form 8938, and the details on your FBAR. It all needs to line up. When you use the proper 4852 method, you ensure that everything is in harmony, and that seriously reduces your chances of getting unwanted letters from the IRS. Which brings us back to the big picture. All of this complexity, the digital roadblocks, the workarounds, the hidden traps, it all points to one thing: a tax administration system that was built for a different era. It just hasn't caught up to the reality of today's global citizens and retirees. So the real question is, as more of us have financial lives that cross borders, when will the system finally adapt?